Hey, how's it going? Welcome to another episode of Millennial Movers, part of the Millennial Movement series. And I am so excited to be here with you all today. I know it's been a while and I apologize, but today we have a really exciting topic. We're going to be talking about VA and USDA loans. If you've been following us on home loans, we've been talking about FHA, conventional, really getting down to them. Now we're on our last two home loans, and they are VA and USDA. So stay tuned. I have my mortgage partner here, Dan, from Movement Mortgage, and we're going to be getting into it. So stay tuned. All right, we are back. Welcome to Millennial Movers. And again, we are talking about VA home loans. VA home loans. If you've heard about them and wanted more information about them, this is the episode to listen to. I'm super excited. This is one of my favorite topics, and I've been helping a few clients lately with VA home loans, and I've done some USDA in the past. Both great products, and my lender partner Dan, who's the same lender partner from the last three episodes. If you've been tuning in, he's going to give us some insight on that. So Dan, how's it going over there? How you doing?
Hey, Chastin, I'm good. Thanks for having me on, man. I'm just excited to talk about more loans. Just, certified mortgage nerd over here.
Yeah, don't we love the loan? So, yes, the banks are just giving away money these days, aren't they?
That's what it seems like, right?
Yeah. So that's the big thing. I mean, I've been really trying to encourage people to check things out. I mean, you never know where you stand. I know a lot of people just jump to, oh, I have credit issues, or oh, I need credit repair, but without even talking to somebody, how do you know? You're just assuming. And I always recommend speaking to someone in the actual field that knows what's going on and knows what the requirements are, so that you can make an informed decision whether you need any of these types of help for your actual credit file. Dan, how have things been going with you? Have you been pretty busy?
Yeah, things have been busy, just clipping right along. Tax return season, everyone gets their tax returns for a down payment on a house, it seems like. Interest rates, might be going up here in the next year or two. Some people believe, so a lot of people are looking to get into something before any market goes real crazy. But yeah, I mean, staying busy, this housing market, especially in the local DFW, is, creates a top 5 housing market in the whole country. So, I mean, doing business around here is definitely keeps you busy.
Yeah. So would you say, just because of tax time, that you've seen an increase in business?
I would say so, yes. And then I expect it to go down maybe a month or two till the school year ends. And then, once school year rolls around, a lot of families look to move their kids, or they move their whole families outside of, the school year. So that way it's an easy adjustment for the children. So I definitely think a lot of spike in business because of tax returns. And then I see it picking up even more once, school's out of session and everyone has the summer to get their plans in place.
I got you. Yeah. That makes sense. I mean, I know on my end, I'm trying to educate people and let them know about taxes and using that money, for something really good, or a really good investment like an actual home loan. And since we actually brought up taxes, and I know this isn't really on our subject, is there any piece of advice you can kind of give people when filing for their taxes? I know, especially for small business owners, we like to go for a lot of deductions, but if you're trying to purchase a home, I mean, is that really wise? Or any type of tax advice you can give for this season?
So I mean, if you are self-employed or a 1099 employee commission, a lender's going to have to go off of tax returns. And tax returns is going to come off of the bottom line, how much income you show after your write-offs, after your deductions. So, you know, if you're trying to qualify for a loan, you know, it's definitely advantageous to show as much income as possible. Downside, you have to pay your taxes, you know, for that year or 2 years that you show more income. But, you know, it's just something you have to do to buy a house. You have to pay your taxes. I mean, it's a federal mortgage loan, so we qualify off of federal income. And, you know, like I said, if you are self-employed, you can definitely talk to a lender and see how much income you would need to qualify. So that way you can work with your accountant and see what, you know, kind of coordinated all makes sense. But you definitely would want to talk to a lender and see how much income, you know, you actually would need to qualify. You need to show in order to qualify for the price range you're shopping in.
Yeah, so it's pretty safe to say, like, don't go and just write off everything if you're planning on buying a house. So.
Especially like you, a lot of real estate agents, you know, they'll make 100, 200 grand a year, but they only show, you know, $0, $10,000 in income. You know, you're only qualifying in income is $10,000 then, because everything else is going to the business. So you definitely need to show income to be able to qualify. I mean, it's going to go off of the tax returns for those self-employed borrowers. So definitely.
So scary. So scary. But you know, I mean, Uncle Sam has to get his money. So
speaking with VA. I mean, we're the ones that paying for those vets to go out and get their homes. So that's where those taxes are going. So it's not always a bad thing.
Okay, yeah, you're right. And okay, so we're about to dive right in here, but I do want to let you all know that if you've been following me on Twitter, on Facebook, YouTube, you've probably seen videos for the Millennial Movement Tour. So this is a actual live tour that we have been doing across the DFW market, and hopefully we can bring it to other cities across the nation, to where it's basically a lot of the stuff that we talk about on the Millennial Mover series, we're bringing it live to you. So answering questions live, Q&A. It's really a first-time homebuyers experience. I know that there's like lots of first-time homebuyer seminars, and they may be boring where you just sit there, but the Millennial Mover series is not that type of seminar. So look out for it. Sign up on my website, ChastinJmiles.com, so that you can stay updated about any cities that we're coming to, maybe an area near you, so that you can attend our next Millennial Mover series live tour, whatever you want to call it. But it is free. We normally provide lunch. It's a great experience. So I would encourage you, if you are in the market to want to purchase a home this year, next year, and you are you don't even have to be a millennial, to be honest with you. At our last couple stops, we've had people of all ages there, and you are extremely welcome. So please, I encourage you to check it out, put it on your calendar, get you a free ticket, because it does fill up quickly, and we can only have you know, as much as the room will hold, or the venue will hold. So check it out. Again, ChastinJmiles.com. All right, you ready for this, Dan?
I'm ready when you are.
Okay, here we go. VA loans. VA loans. All right, Dan, what is a VA loan?
So VA loans, a mortgage product offered to, you know, the vets of our country. It's guaranteed by the Department of the Veteran Affairs. It's a great loan product for anyone that has eligibility for it. You know, typically if you just were in the reserves and never did any actual tours, you might have some questions on your eligibility. So all your lender can get your certificate of eligibility and see how much you are entitled to in that VA loan. All you'll need is your DD 214, but you have to have done service to have any eligibility for it. I mean, you can't just, you know, be a normal citizen and get a VA loan, obviously. But a VA loan, the great thing about it is zero down. It's one of the only loan products out there that, without using any type of special bond or grant program, is a 100% financing option. So it helps a lot of people, you know, stay liquid. A lot of times you only come in paying for the closing costs if the seller doesn't cover any. I know at my bank, I don't know about a lot of other banks, but we actually don't charge any bank fees, just because we, you know, appreciate the sacrifices that those vets do. So we have no cost for VA loans, plus, you know, 100% financing. It doesn't get much better than that.
Yeah. I mean, 100%. So y'all, that's basically, you're not bringing any down payment money to the table.
Nothing.
And I will actually let you know, I mean, some VA borrowers that I've been working with in the past, they've actually received money back at closing. And and I can explain to you how that works if we actually get to talking about you and a VA loan. But during the closing process, you have to kind of put up money just to get under contract, or once you get under contract. And I mean, if you're coming to the table with no down payment and we get your closing costs negotiated, you're getting money back at, you know, closing, and it's a really awesome feeling.
To buy a house and get get
Yeah,
money. Hey,
yeah,
doesn't get much
yeah.
better than that.
Right. So with the VA loans, I'm sure there are credit requirements, right?
Mm-hmm.
Okay. So what are those like?
The requirements for a VA loan, going to be a 580 credit score with an automated approval from the desktop underwriter, the standard system that every lender uses for an approval of a loan. A lot of lenders are going to have overlays. They're going to require 600 or 620, some even a 640 credit score. I, for example, am good down to a 580 credit score, and it does have high debt to income ratios. We've talked about in the past, FHA only be able to go to a 43% or 57% with better scores. I've gotten VA loans closed that went up to a 62% debt to income ratio. So you know, we have a lot more wiggle room in the product there. You know, I just need that 580 credit score. You know, we have a good solid job, and VA is really particular in the last 12 months. They want a good 12 months rental, 12 months credit history, along with 12 months of verification of rent. And that typically is, I mean, about it to qualify. The appraisals will take a little bit longer on a VA loan, but I mean, it's nothing too crazy to qualify for it.
In okay, I want to bring up that well, two terms again. One, the debt to income. So when you say go up to a 62% or, you know, whatever percentage, what does that mean exactly?
So if we use the simplest numbers possible, if you make $1,000 a month, your housing payment could go up to $620. And that would be the 62% of your income is allocated to your debts monthly. It's going to be your debt, overall debt divided by your monthly income. And again, it's on a monthly basis. It's not annual or daily. It's all calculated off of a monthly basis. Your total debt divided by your income. But like I said, the easiest way to qualify or to figure it out is to definitely talk to a lender, because you know, he has all the information there available. He adds up all the debts for you. All of us have our own systems that we just plug it in and it spits out the numbers for us, clean as can be.
Yeah, and like I've told you all in the past, I wouldn't recommend trying to figure out what your debt to
No.
income ratio is by yourself, because I mean, it's a lot more technical than just sitting down and, you know, seeing how much your rent is. But basically, I mean, the lender wants to know that you can afford the house and be able to pay your bills at the end of the day, right?
Yes, that's
Yeah.
exactly what it is. And like I said, I don't qualify. I don't calculate my own debt to income ratio. I pull my own credit report and put it in the system just because, you know, it's accurate. It's not going to miss. And honestly, the system is what's gonna approve you or, you know, decline you. So yeah, that's going to be your best bet.
Yeah. When it comes to interest rates on the VA loans, are they the same as like conventional or FHA, or like what are typical interest rates like?
So your VA loan is going to have a better interest rates than your conventional. There's less adjusters, meaning it's not as credit score driven. Obviously, with better credit, you still will get a better interest rate, but there's pretty much a bucket. Your prime rate today, if your lender's not charging any origination, is going to be about 3.875 on a 30-year fixed. You know, someone that charges origination or a point up front, you know, you can definitely buy down the rate. But I mean, you won't get a loan higher than, you know, 4.75 probably on a VA today, as low as 3.875. So, you know, you're all within a percentage point, anywhere from a 580 score to a perfect score. I mean, it's all comparable.
Mm-hmm. Yeah. Okay, perfect. Well, and interest rates change though, y'all.
Every day.
So hop on it. We don't want to wait too long, and I mean, they are probably going to be rising. So, you know, while we have the numbers low here, it's best to hop on it. What's your personal opinion of the VA loan?
So a VA loan, I think if you're a vet, it definitely is about the best product that you can for a home loan. You're not going to pay any of that mortgage insurance that we talked about on FHA or conventional. Now in VA, there are funding fees. But there's a funding fee for every government mortgage other than a conventional. So that's no different. Interest rates are great, 100% financing. I personally think it is the best loan product out there if you have that entitlement and if you have that eligibility for it. I
Yeah,
would
it's like, why
definitely,
not?
yeah. I mean, it's there for a reason. It's a benefit for serving our country, rightly so. I mean, you should be rewarded. And I think it's a great product, great low interest rates, as cheap as it can get, money wise through and through. It's a really simple process as long as you have a good lender that actually knows how to do VA loans, because there's a couple different moving parts. It's smooth and easy. And like I said, in my bank, we don't have any bank fees. I mean, there's a lot of incentives for vets out there, not to mention there's a lot of fees, as you probably know, that are non-allowables, like a pest inspection fee, and other things that just go into the transaction. I'm sure you speak to your clients about that. It's just a non-allowable that the borrower cannot be charged if they are using VA. So
Yeah.
I think
Yeah.
I think it's the best product out there, honestly.
Yeah, and something about VAs, that the VA loans that I get asked a lot are, we know that the person who has served, could possibly qualify for it, but does mothers, spouses, children, like any extensions of that person, can they qualify for a VA loan?
So a VA loan, typically for any co-borrower, you would need to be married, unless it is like a fiance or spouse. And typically the person that holds the VA eligibility needs to bring the majority of the income, and it's no big deal. Other than that, if there's a deceased widow, as long as the spouse has not remarried, they retain all of their previous spouse's benefits for the VA loan. But as soon as you remarry, you will lose that VA eligibility, because you've now entered with someone else. You're not going to get those same benefits that you had with your previous spouse. Children wise, probably not, unless a parent was helping out a child getting the mortgage for them. There's no way really that a spouse is VA. I mean, again, VA is such a good product, but it's very strict in that sense that it needs to act, you need to actually have the VA eligibility, whether it's the borrower or the spouse. And the borrower's unfortunately passed away, and as long as the widow hasn't remarried, then they have that entitlement. But other than that, there's no other real way for someone on a VA to go.
Nice. That makes sense. Okay, perfect. On to the next. We got USDA, which is another great loan product. Dan, USDA, what do you know about it?
So it's mortgage guaranteed by the U.S. Department of Agricultural Affairs. They, again, is 100% financing, 0% down. And just like the VA, it's going to be a little bit tighter to qualify for, not in the sense that you need to have USDA eligibility, but you do. There's going to be a lot of different requirements as far as property, income, household, your ratios that we've all talked about. It's a lot more difficult, and there are stricter requirements credit-wise to get in. But again, it is 100% financing. And if I like to say, if it fits the box, if the borrower and the property fit the box, it's a great product.
Yeah. Let's talk about the requirements right quick. Now, so the biggest requirement that I'm familiar with, and that I like to tell my buyers when they say, "Oh, can I get a USDA loan?" is, the property has to qualify for a USDA loan. And most times these properties that do qualify are going to be in the outer regions of major cities, or more rural areas, country. But here in like the DFW area, I mean, we're expanding so large and so quickly that a lot of areas where people are moving to are like qualifying for USDA loans. But I'm pretty sure that there's more requirements that you can tell us about. But I know the biggest thing is the property has to qualify for USDA, right?
Yes. So your USDA is going to have a lot stricter requirements. After the property, your income is going to depend again on how much dependents there are in the household and how much is left over, how much money is coming out. It really depends on the size of the property and everything. After that, after we knock out the property and income requirements. Now you have ratio requirements, much stricter than any other loan product out there, even stricter than your jumbo products, your really big houses, because it's just from the Department of Agriculture. It's meant to be, on purpose for, an agricultural property. Your ratios can never exceed really a 41% debt to income ratio. So it's always good if you're looking to go USDA, make sure you have as little monthly obligations debt wise as possible. And then credit wise, it's going to be a little more difficult too. It requires a 620 per federal guidelines. Most banks have the cutoff at a 640 to qualify. But again, there are compensating factors that if you're a little lower, if you have extra money in the bank or if you have a higher credit score, those are all things that, can kind of erase or offset one of those requirements if you don't quite hit. USDA is a little bit different in that sense, is it's a little bit easier to offset something that's bad with something that's good, if that makes sense. Again, you'll want to talk to your lender to go over it all. But like I said,
USDA sounds strict.
Yeah, USDA, they run a tight ship. But again, that's why it's such a good product. It's a very small mortgage insurance, and 100% financing. And like you said, I mean, there's areas in McKinney, and no one thinks of McKinney as really a USDA or an agricultural area. But, a lot of houses in McKinney, for example, are going as, USDA or have that eligibility. So,
Right.
it's definitely out there.
What about interest rates for USDA?
They're going to be a little bit better than everything else. Typically, today, you're going to be finding a 3.625 on a 30-year fixed with no origination charge or anything like that. So you are getting a little bit better of an interest rate that helps out on everything.
Nice.
And they're the same way as well. There's not as many adjusters from if you have an 800 to a 620, you qualify for a USDA or not. I mean, there's a little bit of adjustment, but you'll never see any spike in interest rate or anything like that.
Mm-hmm, mm-hmm. So I mean, in your opinion, I mean, I have my opinion, but in your opinion, what do you think of the USDA loan overall?
I think it's for the right person. Like I said, you really need to fit the box. And it almost seems like those people that do, they already know it and they go right in and do it. It's the people that learn about it and then think, 100% financing, I can qualify for this. I want to get a little bit of a country property or something. They're just a little bit more of a pain. They're a longer process to get done than any of the other mortgage products. But they're definitely out there. And, like I said, if you fit the box, it definitely is a great product to get in cheap. It's beneficial, for a reason. It's out there for a reason. The government made it for a reason to be available. It's just, like I said, I don't think it's the most popular product out there today. I think that just says a little bit about it.
Yeah. So, I mean, like for the VA loan, you do need a certificate of eligibility, but for the USDA, it's just about going and applying like you're applying for a FHA or a conventional, or do you need any type of eligibility certificate or anything like that?
I mean, other than you need to make sure your income fits the box, the property fits the box,
so
your ratios fit, but no, there's no like eligibility like per the borrower that you need anything in particular.
Okay.
Just a lot more normal in the nitty gritty.
I got you. Okay, perfect. Well, y'all, there you go. VA and USDA home loans. So we've done FHA, we've done conventional, and now we've done VA and USDA. I know there's jumbo products out there. We're not going to necessarily get into that one time. Are we missing any loan products, Dan?
There are the bond and grant programs, which if you want to do another segment on, we definitely can do another segment on the bond and grant programs. Or, I mean, if you want to talk about it now, catch me a little bit off guard, but I mean, we could run it now. They're definitely out there, but again, those ones are more hard to qualify too. I mean, but those are your standard loans from any normal federal mortgage lender. Of course, there's always your hard money loans, your portfolio loans. Those don't come from banks like me. They're going to come from your small local federal credit union or from some kind of portfolio investors or, investors that are flipping properties and stuff that can do all kinds of crazy stuff that don't follow guidelines. I can't speak to that because I'm not a professional in that sense on those products. I just know they're out there and, they always change. But as far as other big products that we're missing, no, I mean, because they all have variable interest rates. I mean, there's just different forms of all the programs. Those four, the VA, USDA, FHA, and conventional, are your four standard federal government conforming mortgages that has guidelines set forth that every lender follows guidelines. And then there's investor overlays on top of that make it harder or easier. But those are your four big ones, other than the jumbos.
Yeah. Perfect. And we're going to do, segments on in the future, on hard money loans. And because I know that there's lots of commercials out there on investing in properties. And I know that some of you kind of want to take the investment route. And so I've seen people get screwed on this type of thing. And so that's why I really want to bring a different perspective on it. And then we're also going to talk about, credit for these loans and getting qualified. So definitely keep tuning into it. Like when it comes to lending, I know that's the biggest part of a transaction. Although finding the house is super important, like so many things can go with the lending process. I mean, from getting qualified up into closing, I mean, it's a really tight process that you want to make sure that you're well educated about so that you know what to expect and that you don't go out making bad decisions that could disqualify
you. Make sure you don't go out and buy a car right before you close on your house. And then you have a car and you don't have your house anymore. It's
right.
People got to understand. That's why they got to talk to you. They got to talk to me. They have to talk to another agent, another lender, and just, make sure they're informed ahead of time. Yeah. Yeah. And my thing that I like to preach to you all is don't necessarily try to figure out all this stuff on your own. Don't.
The best thing, I mean, I feel like the things that we have said should give you a pretty good foundation, to kind of, when you do speak to a lender, whether it be one of my lenders or one of your preferred lenders, when you do speak to them, you can sort of know what they're talking about because you've heard it before, and you just won't walk in there and it'll just go right over your head. But like, that's the reason that they're there. They're going to analyze your specific situation and actually recommend to you a product that will probably be better suited for you. I've seen people walk in there like, oh, I'm going to get an FHA loan because it's 3.5% down, and they end up changing over to a conventional because it's better for them in the long run, or they're going to come out with less money monthly, and that's really what they want to do. So speak to somebody, let them analyze your situation, and then you can make a super informed decision once your numbers and your finances are on the table, instead of just us talking about interest rates and credit scores.
It's always important too to be honest and just lay it all out on the table. I mean, everyone's here to help, but anytime you shouldn't work with a lender that's dishonest with you, just like a lender doesn't want to work with a dishonest borrower. It's make sure it's all out on the table, because that way it can be catered to you, and every product can be catered, and every package can be detailed to exactly what you need. And the more open you are about it, and the more providing you are, or as the borrower, the easier it is for a lender to make sure you feel more comfortable in the process. It's like a catch-22, but it just makes sense.
Yeah. Well, awesome, Dan. As always, I appreciate you for being a part of this for these last few weeks and sharing your knowledge on these home loans. I'm pretty sure that our listeners and viewers really appreciate it. The Millennial Mover series has taken off so quickly, and we're doing a really great thing here, and I really appreciate you for taking the time out. I mean, we're recording this at 8:40 at night, y'all, right now. So it's pretty late in the evening, but we wanted to make sure that we got it done and that we can provide you with this. So again, I really appreciate you. Thank you.
No problem. I appreciate you having me on, Chastin. Like I said, I just want, working in the business, you definitely just want to see people be happy and satisfied, and make sure everyone's educated and know what's going on. So that way, people keep buying houses.
Okay, Dan, how can people reach you?
So you can catch me on my email address, Daniel, Daniel, period, Humes, Humes, at movement.com, or my direct office line. It's 214-935-8852.
Awesome. And again, I am Chastin J. Miles. You can follow me on Twitter, Instagram, Facebook, YouTube at Chastin J. Miles. And send me your questions, DM me, tweet me, add me as a friend on Facebook. I would love to connect with you. And until next time, thank you for watching. And thank you for listening. And we will be back soon.